All right, we'll do a reset. We'll try it again. Hopefully this works. I do apologize for that. Again, I got greedy trusting my 6-year-old equipment for 10 minutes. So that's where I went bad, I guess. I guess I need to buy myself a Christmas present. So they said Apple computers last forever. So we'll let the guys make their way into the group here. One thing, we got rid of the hater, the thumbs down. That's cool. So they'll have to come in and hate on this one as well. So I'm still getting used to that. That's really nice to sleep on. A lot of negative feedback on the channel. So I'll let some of you guys come in to the group here. I do apologize having to reset the live stream. No big deal. Dave, thanks a lot. I appreciated your video on M1 review this week. That was really good. So thanks for making your way into the group. I hope you and your new bride had a good holiday. That's awesome. So it's nice to see you in the group here, and it's going to be a interesting 2019. That's why I hope we generate some discussion tonight about what folks are doing in the stock market. Got some of the awesome. I've got baby cakes in the group here. That's fantastic. That makes my night. That's awesome. Ernesto's in the group. I got Doug Whitaker. So I'll let you guys make your way back into the group here. I do understand. It's awesome. It's awkward that I can't set that to register when that live stream goes live. It doesn't allow me to change the settings. It has to have me log out and start a new stream. But that's fine. I've actually got OBS ready to go, but I'm a little bit gun shy using it because I don't have that good of internet connection enough where I'm happy with the quality of the streams that come through on it. So if you guys don't mind, I'll continue to do this. But certainly some interesting dialogue in the group. I know there's some folks here that are talking about having a certain percentage of cash on the sideline. That's really paying dividends right now, obviously. When we talked about defensive positioning, those are the times when you're doing it. You know, it doesn't feel, you know, necessarily that you're doing the right thing. When the stock market's going up every day, you know, you almost want to be able to jump in and put every penny that you have to work for yourself. And it's times like this. I know somebody in the group here was talking about buying. I think it was AVA who was talking about making a purchase on on Christmas Eve day, and that half a day, that would have been the time to actually get a good entry point. Now there's some discussion about the trend, obviously still being to the downside, which is totally fine, but to take advantage of an entry point in the stock market like that is worth it. I've got Lydia in the group here. Ernesto, yes, I'm a strong believer of Roku, as I am. I know it's come down. You know, those higher growth names are getting really kind of punished for being part of the stock market right now, as are individual investors. I came out with a down $20,000 video. And so for you guys, for some clarity, it might be of interest to you guys that those are unrealized losses in the portfolio. So you guys know I typically don't sell a stock in the red. Very, very few times in my experience have I ever found that selling in the red was worthwhile. So those unrealized gains are a loss of 20. Now we've made 10 of that back just in the last 2 days. So we're going the right direction here. It was a nice relief over the last couple days to get us out of free fall mode, which was nice. But I would do everything that I can possibly do to try to gear you guys up to continue to take a defensive position. I've got Bill Schultz in the group here who just popped in, Dave from Average Joe Investing, Lydia and Financial Investor, who are all channel creators. If there's anybody in the group here or the live stream actually that is tuning in here live, you want to kick over and you want to subscribe to those guys, help support this small community. I can't thank Bill enough. I thanked him last week and I'll thank him again, because it's amazing to me the difference in review of some of the comments that I get through the channel. And it's interesting what you kind of avoid, actually. You know, certainly, is it worth it doing a YouTube channel? You know, I know what it is that folks should be getting from me, but I'm just one person, you know. it's awful nice to have a group of community folks through, whether it be through the Facebook group or whether it be here on YouTube or other channel creators as well, who are offering their perspectives on the stock market as well. But I find it really interesting. And I don't know if these folks are financial planners. I understand my topic is fairly, it can be unpopular with a few select groups of folks, okay? Financial planners being just that. And there's been a couple comments that have led me to believe that perhaps they are financial planners. And what's interesting to me is I don't have a personal problem with financial planners. It's business, all right? I have a problem with the levels of compensation and the lack of clarity that exists therein. That's what I have a problem with, all right? And I'd love to have a financial planner come on and actually acknowledge that what I'm talking about is actually legitimate and that people need to understand, instead of just being told that it's a 3% or a 1.5 of just management fees right off the top, how about we just become a little bit more transparent and actually let somebody know what that's going to mean over the long term. Now, if they want to start doing that, then I'm on board with that. But I just don't like the lack of transparency. And that's really where I come in, because I've been there. I've been with 4 brokerage houses in my past. And it's nice to speak from some experience as to what I felt like a lot of the downfalls were. Very, very elegant when you're in the office. Very, very good at articulating what it is that is important in the market. But when the rubber meets the road and you guys end up getting your financial statements, you know, at the end of every quarter, or you end up logging into the account, which a lot of people don't. A lot of people think that because they're paying for that service, they can just put it on autopilot and let it go. And that's one of the worst mistakes you can possibly make. And it's when you start to look at those statements and look at the cost basis of your investments within your account, you'll start to realize that even in an up market, you'll lose money on all those mutual funds that you've been sold. So it's one of those things to where I understand I've got to be prepared for some of the I guess hate that come through. I just really don't understand how people have the time to actually go through and do that. I've built up my portfolio over 25 years, and I had one comment saying that I was going to have less than $100,000 in 2 years. I just don't know if I can agree with that. And the gentleman said, your 25 years means nothing. I've got 40 years of experience in the stock market. You know, where are your stop losses? And as a long-term investor, I just don't see the point in having a stop loss on my positions. You know, I'd rather just invest for the long term and leave it alone. Right, wrong, or indifferent. That's just my approach. And I've been very successful at doing so. Furthermore, I've got a lot of people saying that, you know, this is going to be the crash of a lifetime. Every crash in the history of the stock market has provided some of the greatest buying opportunities that have been presented. And I'm not really sure if these folks are coming on and just playing with the potential of just being lucky and being right so they can say, I told you so. But for us in the community here that are trying to grind something out of us, man, I tip my hat to you. At least this reprieve over the last couple of days has provided a little bit of a stop to the downward volatility, given a chance to breathe a little bit. I mean, I made back $7,500 in just one day. The up $1,000 day, I didn't do a thing. I did just nothing. I just watched it go on autopilot, and it returned back some of that, you know, passive income to me. And I didn't see any of those people come back onto the channel and say, hey, Ryan, I was wrong. You know, I said that, you know, I recommended that you panic yourself out of the stock market and buy at a lower price. And I had a ton of people doing that. And man, I tell you what, it's not right. It's not right to offer that type of advice. What I am talking to new investors about is, if 25% of your total overall investable capital is your limit to enter into the stock market, and that's what you're comfortable with, awesome, then go with that. But I think a lot of people got kind of pulled into the allure of the stock market over the last 10 years thinking, you know, I've saved up, you know, 2,500, 5,000, 10,000. and they invested into the stock market all at the same time, rather than to kind of define their tolerance, to kind of define their level of exposure percentage to the stock market. There's always multiple opportunities, and instead of just dumping it all in the stock market and then losing, and then drastically pulling out of the stock market because you picked the wrong time, it just doesn't make any sense to me. And I've validated this for the many years I've been in the stock market, man. And that's another reason why, you know, I've got a lot of new subscribers to the channel who are making their way in, and I encourage those folks to take a few moments and give it a fighting chance to understand the message of what it means to be a self-directed investor. And you don't have to do what it is I do. I just provide it because I'm one of the very few examples that do self-directed investing. Most of the channel creators in my community are just that. They are self-directed investors. But there's very few people that you'll ever run across that doesn't go with Fisher Investments, you know, or a financial planner of sorts, or they don't invest at all. So I think self-directed investing is somewhat of it's a rare thing. It really is. So the question becomes, how can we tailor the program to take advantage of the benefits and play a little bit on the defensive side of the house and come out of a market like this unscathed? And I just sit back to some of those folks that are with the financial planners thinking that they have a strategic edge. And I just shake my head, because those financial planners are making money no matter what, right? And it's us individual investors that own downright stock or ETF or bonds in this portfolio that we've built up, that we have direct connected to the stock market without the interference of a middleman. I just that piece of the self-directed investor program cannot be overstated. And I wish I knew a little bit more about where these folks are coming from who are coming onto the channel. You know, I don't know if they've got information from other channels that they're sour on. I'm not really sure. I'm sure I've given some advice over the channel, positions and stock, etc., that have adjusted down. But as far as fundamental advice, I don't offer that kind of stuff. I don't advocate for timing the market. I just think it's a waste of time. It's something that I don't spend any time on. You know, when's a good entry point for a stock? That's a good question. How do you build a stock portfolio, or what's your recommended allocation if you have $1,000 to invest in the stock market? Should I be looking at stock or ETF? Now, those are valid questions. I love those kind of questions, you know. But I always find it interesting, man, the hate that come through the channel without just speaking in a lot of vague terms and somewhat kind of trying to discredit what it is I bring to the table as a self-directed investor. And who knows where the future is going to go, you know. I'll continue to build and assess where we are when I'm ready to look at my program and see what we've built over time. So I've got a really cool group in here tonight, man. I want to make my way to the top of the top chat. Thank you for the guys. Again, I apologize for the audio. Again, my Apple computer has a mind of its own. Obviously, doesn't give me one little break. That would be nice to just hop on here and have it work fine. But I'm gonna scroll kind of the top here and see if I can get to some of these questions in the group. Nibbled on Christmas Eve. I think that was obviously a good entry point. You know, to do some strategic buying. I know it was probably tough to pull the trigger during that, because it's been absolutely violent. I think we broke 3 records this week for the violent swings in the stock market. I thought that the one move, the one day, was actually the most impressive, where it was down 600 and ended up a few hundred in the stock market, something like that. It was pretty impressive to see the resiliency of the stock market come back in the fashion that it did. So kind of cool there. I've got Sarah Logston in the group here. Hello to you, Tim, Kay, Ernesto, Marcos. Nice to see you guys. Doug's in the house. Really cool, man. Still some good buys out there, even with the pullbacks. So I just will have the release of my proposed funding schedule for 2019 come January 1. I'm going to be looking at some of my value stocks and some of my growth stocks. I'm pretty well down in the growth section of the portfolio. I also think that that's probably the area where there's the most potential. Those 5 stock picks that I've got on the growth side of the house, I'll just give them to you guys now, but that release will probably come out tomorrow evening. And then a subsequent release for Sunday evening for the growth and the value that I'm going to be trying to strategically take this $12,000 and put it to good use in the portfolio. I'm probably going to be a little bit more leaning toward the value side of the house. But for the growth, it's going to be CRM, Salesforce, Facebook, Google, Adobe, and Amazon. That's where the most value is, in my opinion. And certainly I've had some of those haters come in the group and talk about Google going to 500. I don't know. I remember when Google was at 500. I don't think that's outside of the realm of possibility, but who am I to say that the stock is going one way or the other? I actually think Google's one of the top picks for 2019. It's just one of those stocks that you should really, really want to have in your portfolio. I feel the same way about Amazon. And here it is, 500 off of its highs, actually about $600 off of its highs, giving you a good entry point to the stock at this point. So I'll be coming out with that tomorrow, so look for that. So certainly if you guys are thinking about how you're going to enter the stock market in 2019, if you're going to continue to save up on that 2019 contribution toward the Roth IRA and just monitor it throughout the year, that's something that you could do as well. But I can't wait. I've been kind of locked up. That's one of the downfalls, I think, of contributing all at the beginning of the year, is that it kind of locks me up for new, fresh contributions, and I've got to trade on appreciated value. And it kept me going all this year through 2018, where I was strategically, manufacturing profit within the account and really just building it up. And that's another thing that I was successfully able to do is I was able to mark some realized profit within the portfolio of about $15,000 this year. So those are some of the things that I don't disclose on the "Hey, I'm down 20 grand" video, which is great for the masses on YouTube, and that's what draws some of that hate, honestly, because I think a lot of people actually like to see people suffer, to be honest with you. And I commented on the old script, the one that didn't have any audio, that you would have assumed that I harmed their family or something. They almost take it personal, but anyway, I don't know where it comes from, but just to give you kind of some ideas that, for the portfolio, I'm managing, a significant amount of money in the $6,000 that goes into each of the Roth accounts, typically go in right away. To work throughout the course of the entire year. So certainly keep that in the back of your mind. That's going to be right around the corner. And you guys are going to want to kind of keep that in mind for 2019 contributions coming up. So I got paid today, and I was a bit sad I saw green. Geez, Lydia, man, you'll get used to it. I hear you. It's a reassuring thing. It ended up down today. It was a roller coaster ride today. The stock market didn't know where it wanted to settle, but it was kind of fun to watch today. I really haven't been making a whole lot of moves. This is really one of the most underutilized, least talked about strategies in the stock market, is that so many people always want to think that they need to be doing something. And I've talked about this from the beginning of the channel. It's our human instinct that if something is going wrong, we want to jump in and try to fix it, And the stock market, you almost have to do the opposite, in that sometimes just doing nothing is more often than not proves to be the most prudent move, and to just letting the storm settle. I mean, if you want to enter into a stock at a recessed price, certainly you could do that, but you really need to be careful that you're not trying to catch a falling knife. I mean, you're going to have to hold the stock into the downturn if you don't get it at that perfect juncture. So you just got to be kind of careful. And I would just choose rather to kind of sit on the sideline and watch things pass and observe some of the chaos that's going on, some of the decisions and some of the rhetoric that come through some of the financial channels. It's kind of interesting to me. I got Bill responding there, so thank you for that, Bill. Good day to buy some stocks. Monday, it could be. Like I said, I'm going to let things settle. I've got my plan for this hasn't been, of course, no selling. I've been holding. I will be keeping the contributions to the employee-sponsored retirement account the same. You guys know I do 10%. That's just what I do. I won't be increasing that. I probably should. But looked at that, and we're just going to hold true on the 10%. That's good. And push new contributions in via the Roth IRA, which really is the flagship account. And that's the #1 option that I always look at. And if I can at least do that, then I can sleep easy knowing that I'm building toward the proper allocation toward tax-free, or to at least tax exempt until I pull it out or it becomes eligible at 59 into the Roth account. So good stuff, man. I may keep adding to my Roku position. I need to average down. You could do that. Gosh, you've got the world is your oyster, and you've got a lot of opportunity in your portfolio. I couldn't remember too much about how much dividend exposure you had there, but there's some dividend names out there that you could probably have some starting positions in. I mean, Roku's not going anywhere. You have it. You own some shares. Why not just keep it as part of the growth portfolio? You've got Amazon. You've got some pretty good exposure to growth. And I would award you, your risk tolerance is amazing, right? It's a great risk tolerance. And I know you can handle any swings in stock. But I think to kind of combat the downturn in some of those growth names, I think you'd be really well served to kind of pick out some of your favorite value stocks out there. I know you've probably got it. You cover the stock market pretty well. I think you'd find that the dividends sure are a nice way to buffer and hedge some of these volatile moments in the stock market. I don't see it letting up. I don't. That's just my pulse of the stock market. The last 2 days, they've been great. Blah, blah. What does it mean in the long term? I don't know. I've still got my sneaking suspicions about, the debt load and the China thing. We are on a shutdown right now. I don't know if that becomes long-standing, if it affects things in the stock market. I don't know. But there's some uncertainty, and the stock market is sensitive to uncertainty. It doesn't like to not know what's going on. So when you start to throw this much uncertainty at the stock market, I'm even hesitant to just go in all. Now, I probably will, but I'm reluctant to do so. I'm reluctant to just take all of that capital, and I will probably be looking to strategically deploy it over a series of months in the stock market. And then I'm actually going to be looking at February timeframe, February, March, to be maybe taking some profit off of the table as well, moving to safety. I'll monitor the situation and see kind of where we are and where we've recovered. But I tell you what, I mean, it's a great, I understand, I like the product as well. But if you're looking at a sector that's down right now, I don't know how much exposure you have to the oil sector. Oil is beating down the door right here. Disney is probably the top pick for 2018. From a fundamental and technical perspective, everything is a go for Disney right here. If you had one cornerstone to add to the portfolio, it would be Disney. That's my recommendation. And again, you guys know I can't come onto YouTube and just tell you to do something. It's got to be for entertainment purposes only. But buy Disney. Buy it. That may be a stock that I'm going to be adding some more to my long position right now, because trading at 15 times, it's way below its historical price to earnings ratio, and they are delivering on all cylinders. Disney is not one of those things to where they're going to have this slowing park sales. It doesn't work that way. They're such a consistent business, and that's the beauty of owning them. They have such a wide moat around the castle, no pun intended. But Disney would be one of those stocks that I would look at, one of those big boring stocks that, you may grow up and own it the rest of your life and maybe give it to your kids someday, but Apple's in that category. And excuse me, not Apple, but Disney. And finally, Some of the other beaten down names right now that I'm very aggressively looking at is our financials. Bank of America, Citigroup being my favorite, but I think Bank of America really looks attractive here as well. So certainly a lot of options on the landscape. Don't get crazy, all right? Look at your portfolio objectively. This is a lot of fun, okay? Don't stress out about it, please. Building your portfolio is fun. There's nothing that gives me more pleasure than to have the luxury of looking at my portfolio and maybe starting a new position in a particular stock. Walmart is another one. Philip Morris right here in the mid 60s, just incredible. It doesn't get any better buy point on IBM right here at 110, just a ton of stuff on the landscape that really, really looks attractive. Trend is still down, but 20-year time horizon. So happy to add positions like Boeing. That's another one. Home Depot, Apple, Amazon. This is why we do these live streams, all right? While everybody else is talking about doom and gloom and the stock market, when's the recession coming, blah, blah, it doesn't do any good. These are the types of discussions that I like to have, is to look objectively as to what's out there on the landscape and what folks are doing to maybe pluck a few flowers for the garden, man. It's time to maybe do a little bit of harvesting. And if you've got some room in the portfolio to add some of this exposure, you could do that right here. Small caps, VB. If you guys need to add some small cap exposure to your S&P exposure, I might break 100 tonight. I just have to take a small break here. That's really cool. I hope we do, because I tell you what, this is a great opportunity for me to get onto YouTube and talk to multiple people that are looking to get some insight on the stock market and some opinions about where things are, moves that I'm making, and to bounce some of those ideas off of you guys and hear what it is that you're doing as well with your portfolio. It's a lot of fun. So hopefully we can break 100, man. Good stuff. I'm trying to keep my eyes here on the group that's in here. Let me kind of change this here. I'm in top chat again. I don't know why it does that. I probably have a ton more comments. I do. Let me scroll back up here to the top. I have no idea why YouTube does this. I don't know. It's YouTube. Why would they get anything right? It's 95. I got a lot of thumbs up too in the group tonight. Very cool. What's a good fixed income portfolio? So I've been asked this a ton on the channel, and I do apologize. I've had a couple topics, honestly, that have just been burning in my head. And that's typically what I'll do, is I'll keep them in my head and sift them around for a few days, and then kind of script them out and then roll. But my fixed equities is around 25,000 right now. It's comprised of 6 bond ETFs. I've got the total bond market, which you could buy and just own that. But I've got some exposure to some corporate bonds and U.S. Treasuries, both on the short, intermediate, and long-term side. And I'm going to be sharing those positions with you guys. I'm enjoying owning them. It's been a great counterbalance to the portfolio. They react well. The stock market is very volatile. Those bond portfolios will go up. I did buy the longs as the yield curve has kind of flattened out a little bit. So the long-term bond yield, the 10 years and the 2 years, have been actually, which means that they kind of become the same interest rate. So it becomes more of a disincentive to buy the 10-year if you can get the same yield off of a short-term bond yield. But I did end up going ahead and buying a little bit of everything. I think the idea behind what I've read for proper bond exposure is to have more short and intermediate exposure in your portfolio as opposed to the long term. So just a slight mistake on my part, but I hope that helps you, Ernesto. That could be one of those things to where you're always looking at your portfolio and saying, hey, my risk tolerance is conservative, or it's moderate, which is right midline. And in most of the brokerage accounts that you guys have, you'll have an asset allocator tool. It's very simple to use. It allows you to kind of upload your own holdings and compare it against a proper allocated portfolio based on your risk tolerance and based on your current holdings. It'll tell you what you have and whether or not to decrease or increase your holdings. That's what I use. So right now, for example, I'm underweight foreign exposure, a little bit underweight small caps, and overweight large cap growth and value, right? And that's what it tells me. So it gives me the idea about where I can add some to the portfolio to get a little bit better exposed, a little bit better asset allocation. That's what the tool is used for. But that's a really good question. I've really enjoyed. I wasn't sure when I first bought them because I watched it every single day and it seemingly went down every day. But it's something that I'm going to keep to the side. It's a very, very long-term holding of mine. I won't be selling in and out of my ETFs. I've already been paid dividends on all 6 of those. So those have rolled in as partial shares. Obviously, you guys know I dividend reinvest. And I've done that, and obviously that's going to be a much longer term holding for me as I build up that pillar of fixed equities in the portfolio. So good question. But I will be doing a video on this section and just being transparent. I don't care to show you. I don't mind showing you guys what I'm working with, so you guys can kind of see how I deployed it for the fixed equities. I don't mind buying as it drops, even if it drops further, as I can't time the bottom. Man, Bill, so that comment is a really smart comment, and it's interesting because as channel creators, you know, we've got an obligation to put yourself in the position of somebody who's, you know, just entered the market 3 months ago. And I'd be lying if I sat here and said it didn't affect me at all. Okay, I'm a human freaking being. Furthermore, I work really hard for my money. So watching it just disintegrate every day, it's not one of those things that I look at and I'm like, yay, that's awesome. I'm so fired up that my money is just, the portfolio is adjusting down. With that said, I do have the perspective to know exactly what it is I need to do or not do to either react or not react to what's going on in the stock market. Very, very important. But, you know, I was a new investor at some point too, and I ended up going through those progressions and, you know, seemingly making certain mistakes of overreacting to the stock market or trying to time the market. And it never, ever ended up good for me. Never. Now, I successfully timed the market a few times, which was honestly the bad medicine that I needed to think that I could do it consistently. And you do it and you do it and you pay more attention. And the more attention that you pay to the stock market, the more you think that you can time the market. And then you end up really getting burned. And it's like, wow, I wish I would have listened to all those folks that told me I could never time the stock market. But just very, very important. And it makes it so much easier on your portfolio approach if you just buy and hold and just be quiet. You know, I've got these folks all the time that are like, okay, just sell on the way down, just sell it and buy at a lower price. That's great. If you can do that, wonderful. It's not something I advocate for, but the people who did sell at some juncture within the last couple months, you've got some work to do now. What do you do now? When do you get back into the stock market? You know, once you sell, what are you going to do? Stay on the sideline the whole time? Are you just going to stay on the sideline indefinitely? What if the stock market goes sideways for 2 years? What if we end up going on one of these historic bull markets that continues up into extra innings and we end up, you know, going up 4,000 points from here? You're going to look at this V in the stock market and say, wow, my buy point was right about here for about 40 minutes on one particular day, and I missed it, right? And that's what a lot of people are coming to me with, is to thinking that they can thread the needle in such a manner. And I know for a fact I can't, but I do agree with you on the buying the stock. I don't mind buying it either, especially if it's a name that I've been watching for a significant amount of months come down. Kraft Heinz Food is one of those that I would buy right here just without missing a beat. It's trading at 5 times. I mean, it's silly. It's just silly. And it's just got absolutely beaten up with the crowd. So that'll be one of those stocks that I actually add some of the contribution to come 2019 January, is Kraft Heinz Food as well. We'll be adding a little bit more to that position, not to get too crazy, because that's a falling knife right now. It's just been absolutely brutal on my portfolio, but building a nice position in it, with dividends, pays a nice dividend, and we're continuing to get paid the dividends on the way down. It's amazing to look at some of the singular holdings in my portfolio and how bad they are, and how little I'm down. And that's the defensive posture that I try to express to you guys, how important that is to build up a portfolio that's, well diversified, honestly, to start, and then just well positioned in the best quality stocks that you can find, because it's really amazing at how defensive those are when the stock market really gets cranky. It's really nice. So shout out to Lydia, the financial investor, as well. Awesome content. Nicholas, thank you for that. I agree. Both sponsored channels of mine, I'll do anything I can do to help them. I think I did mention on the other video when I was losing sound that if you are new to the community or you're catching this on the playbook, the 4 channels that have made their way in here, Average Investor, those 2 are in here. I've got Bill Schultz in the group and Lydia Santiago. Those are the 4 channel creators that I've got on the top side. And as I observe them, I will call those out. I do it anyway. Why? Because I can. And if it helps them in one small iota, again, if you think building a YouTube channel and offering your content and opinion to people is easy, I beg to differ. It's not. So any little bit of help I can give them, I'm glad to do it. That's why the majority of my sponsored channels are smaller channels like mine. So I'm glad to do it. So so I've got Mike Lowry here, who's hitting up Brent with a question. Thanks for taking that, Brent. I appreciate it. 6K. So you guys know the Roth IRA contribution limit has bumped up $500. I'm pretty sure that if you're over 50, the contribution limit has bumped up to $6,500. You guys honestly can keep me honest in that. So please do so. If I'm wrong on that, you guys can correct me. But that obviously does allow for some catch-up contributions after 50 years old. So good stuff there. Larry Massa's in the group. This past year, I was like JoJo the circus clown with a new pet. I'd fund the Roth and buy. I'm going to build up cash and stagger my way in on the stocks. There's a little bit of craziness to that comment, and I don't want to say that craziness is what's necessary in the stock market, but there's nothing unnatural. Excuse me. There's nothing natural about back as calm as can be watching your money go down. Okay. Sometimes you just need to be like, you know what? I'm going to approach this like it's a war. And that's the way I want you to approach it. That's the mentality that you kind of have in that, you know what? If the stock market's going to throw its very best pitch at me, I'm going to do the very best I can do to hit it, and that's one of the things that sometimes gets missed a little bit, in that people think that they can just invest X amount of dollars and they're going to end up a millionaire. And you could, okay? But it's so much more fulfilling to have a little bit better of an impulse about your money and have a little bit more control about why you're doing what you're doing and what your money is doing for you. That's the most important thing. And then to believe in the strategic approach to your program. I mean, I don't do a video without mentioning the self-directed Roth IRA. Why? Because opening that account gives you that automatic tax protection and automatic wealth preservation. Those 2 items, I would hope that most of the subscribers to the channel can really articulate and explain that those 2 aspects of self-directed investing, the tax protection you can have under a managed program, but the wealth preservation piece is really the most important part about putting assets within that Roth account that can grow unobstructed into the future. That's the most important aspect and niche of the channel. And I wish there was more people talking about it. I really wish there was, but there's not. And I'll continue to be one of the very few ambassadors of the message of self-directed investing until more people start to pick up the ball and help me share the message. That's the whole idea of doing what we're doing. So SPHD, pretty good as far as fixed income ETF. So Brent's offering another one. My products come right off of Vanguard, paying a 0.10 expense on those accounts. I think they're all the same. Excuse me, the products. off of Vanguard. So that's where I chose it. But the SPHD he's offering there. Mike O, Ernesto, maybe first quarter earnings in April. I've got Ernesto in the group here, man. Hello to you and happy holidays, man. Thank you for all your help this year in 2018. Just appreciate the heck out of you and the work that you put in. Thank you for that. Might have to stop adding to my taxable to concentrate on the Roth. Same portfolio will be in both. That's interesting statement. I've had a few of those. It might have been you, Kanon, that was hitting me up with that question, talking about the proper percentage of exposure between the two. And I look at it more of an order of operations, that to make sure that you can do the Roth first, and put the surplus funds into the taxable account if necessary. And when I say if necessary, I mean you don't really need to have a taxable account unless you have some surplus income that you're making and you have no problem making the maximum contributions, which I know you don't. So in your case, it does make perfect sense to have that taxable account there. As far as a perfect percentage of allocation between the two accounts, it really just depends on how you're utilizing the taxable account. I've got some growth in there, I've got some dividends, and I've got the fixed in my taxable account. That's just how I utilize it. I don't really want to have fixed within my Roth accounts. I'd rather have a little bit more of the income generators in that account as we're trying to accelerate that growth, marching toward retirement. And fixed equities is just that. It's going to make a very nominal rate of return per year. You know, they're rated at about 5, 6, 7% on some of those bond ETFs and fixed ETFs that I've picked up. So that's the way I utilize mine. So good stuff. Try to get to some of these other questions here. Happy Friday, everyone. Such a wild market we're having right now. I got Hector Mendoza who's commenting. I've never seen anything like it before. Had a lot of comments that have come through as well. And I think it's generating a lot of angst. I really do. I don't, I really shouldn't take the negative comments that come through the channel, I guess, as personally as I probably do. But I'm just not really sure if somebody really thinks that they need to take the time to offer some negative comment on the channel. It makes me wonder where it's coming from or why, or if they heard something from me specifically that sent them on a wrong track. I think one of the comments on the last video that I didn't have any audio on was basically saying as the channel gets a lot larger, that there will be probably a lot more hate come through the channel, folks that really haven't evolved with me over time. And evolving with me, I throw that out there with the full confidence that a lot of people have started self-directed accounts, like they're actively doing this stuff and we're talking the same lingo. You know, you sit back sometimes and I want you guys to answer for yourself what it means to seek some of the guidance or opinions that I offer through YouTube, you know, but eventually I want it to mean something to you. You know, I'm giving it to you. It's yours. I know what it means to me. I want it to mean something to you. And from video one, I've always said to empower individuals. And that's exactly what I mean. I want you to maybe give credit and say, hey, I found this YouTube guy on YouTube and he was talking about investing on his own. Sounded like a novel idea, something I had never heard of before. And now I'm doing it myself and it makes perfect sense. And if you can explain why it makes sense, then we're absolutely doing our job. And I'm not just talking about making sense because I make it make sense. I'm talking about making it make sense for you. All right. There's a big difference there. And we'll continue to throw out the message there, man, until we really, really start to get that groundswell of momentum. And that's really going to be the power that carries the channel through, is getting some of those folks that this message fits like a round peg in a round hole. I mean, it's going to be that important to turn people onto it that are really starting to understand how powerful their money is in a portfolio that is able to grow unobstructed. It's a powerful, powerful thing. We're not getting any validation from the stock market right now over the short term, but you'll get that validation over the long term, and you'll probably get it a lot sooner than you think. But But so you just got to stick and stay, make it pay, baby. Stick and stay, make it pay. That's what you got to do in the stock market. And you'll get those validations. That I will tell you will happen, but I'm not going to promise short-term validations, especially over the last couple months, to where there really hasn't been a lot of place to hide in the stock market. If you've been involved in some form or fashion in the stock market, you've been punished, no doubt about it, and you've been humbled. What I said many, many times, the stock market will humble you. So you just got to be kind of careful about seeking your level of exposure, stuff we talk about, stuff that can always evolve as well and help you deal with future volatility and downturns in the stock market as well. So very important. I've got Gwendolyn in the group here. Good evening to you. Happy holidays to everyone again. Larry Massa, hey K9, you guys are talking within the group there. Nobody has any questions for me. I just sit here and talk to myself the whole time. This is kind of cool. But if you guys, certainly you've got the rest of the sponsored community in the group here. You guys hit those guys up, and you know where my perspective comes. And I'm just here to facilitate the discussion, man. Absolutely. Keg, are you stirring the pot? Who's stirring the pot? Keg stirring the pot? Probably. That's awesome. We need to have more stirring the pot. I think that's good for discussion. I got Jeremy Sims in the line here. Dividends and in cash, I trust. Yeah, so that's another thing. I don't know if Jeremy, you caught, I was talking before the live stream a little bit, the importance of having that cash on the side and the difference between, seeking out your exposure through a financial planner. If you go in there and you got 10 grand, I use this example all the time, but it's very important to understand the difference in objective. I would tell you to scale that money in. There's nothing wrong with taking $2,500 out of $10,000, 25% of your investable capital, and putting it into the stock market. Whereas a financial planner is going to say, yeah, 10 grand, no problem, let's do it all. And you may say, whoa, is that a little aggressive? The stock market's really volatile right now. And they'll say, well, what's your investing time frame? Are you long on your money? And they're not really going to care. Most of them are not fiduciaries. I'm going to be coming out with a video. I've been actually studying the law on fiduciary and what the fiduciary responsibility actually entails. I've got everything on my desktop right now, and I'm doing what I consider a detailed read. And if you guys don't know, I deal with the law daily on my regular job. So I'm actually at it. So what it says in the law is really interesting with regard to the way I read. They're not bound by anything, and the reason I say that is because there's a couple words in there that I'll allow basically a recommendation through the law. Furthermore, I don't know how many cases that are actually out there of fiduciaries that have broken their fiduciary responsibility who have been actually proven guilty of doing so. So I don't tend to give a whole lot of credit for when I have the word fiduciary thrown my way. I don't. Sorry. You got to earn my respect, and that respect typically comes from experience. And if I've got a 22-year-old fiduciary sitting across the desk from me, good luck, because it's going to be business. It's not going to be personal, but it's going to be business. So you're going to have to earn my respect as a fiduciary if you're going to sit across from me and give me some sort of spiel that's supposed to make me think you have my best interest in mind. So kind of keep your eyes open for that. I'll be coming out with that video as well to kind of discredit what I feel is really a misconception about the idea of seeking out a fiduciary and having them be able to wave a magic wand for you and solve all your financial problems because they're a fiduciary. I think that's a crock of crap. But Jeremy, I agree with you, man. The dividend piece, the dividend portion of my portfolio is one that it's a pillar that kind of stays consistent. I love the dividend piece of my portfolio, man. Having those value stocks in there is legit. It really is. I bought growth at the wrong time this year. Probably one of my biggest mistakes, if you can consider it a mistake, buying Amazon and Google and Facebook. And I always kind of abided by a rule not to own them all at the same time. And then I just lost my head for a small amount of time and thought that I had the stuff right there, and I bought it, and I probably just bought them all at the wrong time, and they've been doing nothing but going down. So I've scaled into Facebook. Certainly that's easy enough, but yeah, cash is really, really important to have there on the sideline. So I appreciate you coming in here and offering your comment like that. That's very, very good. Thank you. I would never touch Roku again. I rode an early hype wave. I do not see them having much of a future. So the the digital streaming service actually does have a future, certainly. That would actually be one of the reasons to kind of go against some of the traditional providers like Comcast. I mean, Comcast is a buy right here as well, but there's a reason why they're trading at such a recessed valuation. Cord cutting is a very real thing. I have a Roku. It's just that I've been there, done that with regard to identifying a product and investing in it because I think it's going to be the next best thing. I always tend to try to let things settle out a little bit before I just jump on what you consider to be hype, because a lot of that stuff comes with hype, and you got to be kind of careful, because as quick as it can go up, and everybody is jumping on that wave, it can really, really hurt you when the market takes a step back. Those higher growth names are gonna take more of a haircut than the value stuff in the stock market. So I do agree with you there. Ernesto says Marathon Petro. Marathon Petro is a buy. Anything LNG right here related, Chevron's a buy. I could go off. Energy is one of the toughest sectors to invest in, and I like that. Okay, you guys know about some of the subsectors that I don't invest in. I love industrials, but there's a lot of subs in industrials that I don't invest in. Energy, I love energy, man. I love investing in it. I own about 5 big energy names right now. Hess is a buy right here. That's another one that doesn't get thrown out. Valero, ConocoPhillips, some of the midstream businesses as well. Some of the limited partnerships are very attractive. Enbridge is a workable investment right here. Of course, I own Exxon, which has been just absolutely destroyed. Marathon Petroleum is one of my absolute favorites. That's a long-term holding of mine. I'm not getting rid of that at all. I'm going to let oil shake out a little bit. It's really actually behaved quite well since I recommended the stock. It's down about $8 or so since I recommended it, but I'm solid with a Marathon Petro. Marathon Oil actually is another good name. Actually, it's broken down below sub 15. That's another really good name. Got some great Permian exposure, Pioneer Drilling. There's just a ton of them here, man. So kind of take your pick. Royal Dutch Shell, the largest LNG producer in the world. I could go on and on with my oil, but certainly just to give you kind of an idea of what to look at for some of the sectors that have really kind of taken a haircut back here. But I'll figure out. I figured you'd get it. I got Robert Lapointe in the group here. Welcome to you. Happy holidays. Awesome stuff. YouTube can kiss it. Yep, nice. Disney is excellent, Sean. That's a good. I've got a really nice position in it now, and I'm thinking about actually adding to my existing position. So I got Doug Whitaker in the group. As I said, someone needs to push Humpty Dumpty off his wall. Geez, I hope you guys aren't talking about me. Good grief. I don't even see who y'all are talking about in the group here, man. Good stuff, man. Costco looks very promising. Yeah, there's the Costco with Home Depot right here. Very, very good names. Walmart, good grief. I mean, Walmart's just a beast. I could take a crack at Walmart right here. If you guys were interested in a retailer, I know the high growth stuff is going to be more on the Amazon play, because I'm looking to get, the cloud play exposure, CRM Salesforce. I mean, that's one of my favorites. Just bought it at the wrong time, but it's actually behaved quite well for a stock that trades at 51 times forward earnings. It's worth it. In the long term, I think that could be a 4-bagger. So I'm happy to own it. I may look at adding more to Salesforce. I'm just going to be very, very careful on adding to growth. I'm going to be looking at adding more of the bulk to the value. All right, that's what I'm going to be looking at when I hit this 12,000 infused into the accounts here come January 1. So let me cruise down here. I bought Disney at 114, then sold for a minor profit, and now back at a good price. So you're channeling the stock, Nicholas. So if you guys have reviewed that comment, I want you all to kind of take notice about what Nicholas said in this comment. It's legit. If you can buy and sell a stock, it doesn't work out all the time. I mean, you could have sold at 114 and it could have, went up to 120 and you missed out on that. It happens sometimes, but look at what you did. You took profit at the time you wanted to take profit. You did it. You let the stock come in. Now it's trading at, it went up pretty good today. It's at 108 today. It went up after market $2 after it got a positive endorsement after hours. But yeah, you're still getting a good entry price on it here at 15 times earnings. But appreciate your comment. If anyone asks me anything and I miss it, I apologize. I'm working on stuff while listening. Yeah, Bill's probably doing some project, man. So I saw some of the ways people catch this stream, and it's pretty cool. They just put it on and let it play. So I appreciate that. 5 more days until 2019. Can't wait to fund my Roth IRA. I agree. I'm ready for a new funding pulse. I think it'll be nice. It's interesting to be funding the account after watching it come down a little bit, but it's nice to infuse that cash again in there and have that ready to go and have it ready to deploy again. It just kind of backfills some of that eroded value that's taken. And that's the way I look at it. I can't wait to build it back up again. Maxed out my Roths this year, just found out you can't contribute more than your yearly salary, which I don't have since I'm right out of high school. So I now have to withdraw 55 or face a 6% tax. Yeah, that's true. Just be careful with that. You can withdraw your contribution without any penalty, so you're good there, unless it's within 5 years. You could be in a little bit of a hot water there with that move. Yeah, that's a tough one, man. Geez Louise, I've got folks that are tuning into the channel that are getting an early start on this, but if that's the biggest mistake you ever make in your investing career, man, you'll be fine. I'll tell you, I've been in hock with the IRS twice. I was one of those Gordon Gekko guys that thought I could just day trade my way out of a job and just quit my day job, and it ended up losing $3,000 when I first started investing. I had no idea what I was doing. I was investing in everything under the sun, every penny stock you could ever invest in, and that's why I tell you guys. It's really not a good financial plan to be doing that. But I've since made up for those mistakes over the years, and one of those things that I can kind of talk about now and kind of laugh at. At the time, it really wasn't that funny because it's $3,000, and the IRS, decided to send me a bill because I didn't write the taxes on it. I had no idea what I was doing. So outside of a Roth account as well, making all those penny stock trades. So not a good way to make a living, man. So need to get a hold of Trump, contact him on Twitter. Doug, do you do that, man? Good stuff. Now I get it. Now I get who you're talking about. Y'all are talking about Humpty Dumpty and the wall. Good stuff. Michael Hayes, I agree. BAC looks good now, but will look better in a few months. Yeah, I don't know, man. It's trading it at 3/4 of the tangible book. It's the cheapest of the financials. I thought Morgan Stanley was a better buy. I just think it's just as well of a quality institution. Bank of America would be next. And I would even consider now with Wells Fargo paying their $5.75 million, I think 575 million in fines or something like that. I would look at Wells Fargo right here as well. Those are the top banks. I think they're looking really good right here in my opinion. So hopefully, since I took a 4% loss since October, I won't have to fill out any paperwork or pay anything. Yeah, just figure that out, man. It's really it's not the nice part of the investing part of it, but you'll get it figured out, man. Keep your head up. You're good. What's the number one factor to look at when deciding to purchase a stock? That's a really good question. I kind of led into that. I'm surprised I don't get more questions to that. I could talk for a long time on this, and I know I have my method, and I typically use the information when I'm interested in a stock. It really starts and ends with the highest quality stocks in any of the given sectors, okay? And I understand that you're asking for the number one factor, okay? And I might surprise you with this answer, but I have to be familiar with what it is that I'm investing in, okay? It has to be a business that I believe in. Home Depot, Costco, Verizon, Apple Computers, Bank of America, Merrill Edge, right? You know, it has to be one of those companies that I'm one of those guys that doesn't discredit analyst reviews. I don't discredit it. Do I read it as gospel? No, but I'm interested to know why they're recommending the stock for a buy, hold, or sell. And I don't discredit that stuff. And if you can put the Morningstar together with some of the other, Bank of America has a big analyst page. Morningstar is one of the ones that I look at as well. And I'll actually get into those reports and read through them. But to be quite honest with you, I don't need to do a whole lot of research to understand to invest in Apple. Okay, so the deliberation that I went through to buy Apple last time was the fact that it has come off of its 52-week high and adjusted back here, and I picked up more of the shares. Not a lot of technical analysis that was done on them. There was nothing that was screaming at me on the charts. There was nothing technically. There's so many stocks that I own that I want to be part of for the rest of my life. United Technologies right here. I haven't looked at a lick of analyst ratings. I haven't looked at any technicals yet. I haven't looked at anything to let me know that UTX is probably going to be one of those positions that I go ahead and increase my stake in. So I think it'll help you guys really understand that my perspective on the stock market does not it doesn't specifically focus in on the products. And I find this to be a mistake all the time, is that it's all about the product. It's all about the product. It's all about the product. And I beg to differ that it's more about the plan that surrounds those holdings, you know, the account that you choose, your ability to weather downturns in the stock market, your ability to dollar cost average and understand the benefits of it, your understanding of why you do a dollar cost average program. So I think that's so much more important to understand tax protection, wealth preservation through the elimination of fees. If you can understand those things, and you came to me and said, you know, Ryan, I'm thinking about buying Ulta Beauty, or I'm thinking about buying Estee Lauder, I would say, yes, absolutely. And I would say that based on what I know of the company. We could get in together and look at stocks and look at the charts and look at the technical piece and all the analyst ratings. And you're going to find that both of those stocks are recommended strong buys right now. How they are with their dividend, how long they've paid the dividend, do they pay the dividend, right? But if I were going to earmark one specific thing to where I was just telling you what it is that I look at, it has to be something that is as close to the best of the breed in any one given sector to invest in, and I have to be familiar with it. And that's the most important thing to me. And I've invested that way my whole life. I really have. There's just certain stocks out there that I really want to be a part of. So I don't really spend a whole lot of time looking for the next best thing. I don't look for those, you know, biopharmaceutical companies that are coming out with the cure for cancer. I don't spend any of my time researching that stuff. I don't, because out of the healthcare sector, I can tell you exactly what stocks I own and what stocks I want to be a part of, right? I own J&J and I own Medtronic and I own Pfizer. I'd like to reposition into Merck, and I'd like to own Abbott Laboratories, and I'd like to own ones out of the healthcare sector. And since my allocation exposure, I try to really abide by those allocation rules. For healthcare, it's 15%. So I don't really need to look a whole lot further outside of those particular names to gain my exposure in those particular sectors. And that's how I look at what stocks I'm going to purchase. I hope that helps you understand my perspective. And I do thank you for the question. That was a good one. Good stuff. I took decent profit of Bank of America. Smart. It's almost time to buy back in. Absolutely. Funny, I think Ryan just hit on 8 out of 10 of my top 10 today. Nice. Good stuff. Hey, Dave, I think you're probably talking about a video you just released, so I don't mean to ruin it for you, but yeah, I mean, there's a lot out there that are really looking just scary attractive right here, and I guess it's going to look that way because I'm so used to seeing these elevated share prices and just, you know, kind of being lulled into buying some of them, honestly, especially the growth stuff. Yeah, it really looks attractive right here. So I've got about an hour and 5 minutes on this live feed. I'd like to keep it to an hour and a half again for the folks that tune into the message after the fact. If you guys have made your way into the community and you're still supporting the live feed, we're hanging tough at about 76, and I've got about 43 thumbs up. So certainly help take a 2.5 seconds to hit the thumbs up button for me, and man, help us support the message. I don't know if I've created a machine on YouTube because, and you guys will notice that I haven't been editing a lot of my videos. I spent an enormous amount of time doing that, and I've kind of done away with that. I may pick back up on that at a future date in the life of the channel. But I think it's so much more important to be doing a little bit more frequent uploads and really stoking the pot on the discussion. I'm not going to be flowing content onto YouTube just for the sake of doing so, but my ideas come in my head, and when they do, I'll sit down and throw down and shoot the video. I can have it up in a matter of an hour or so, which is, you know, that's a lot. It's a lot of work, man, to get those up. So, but it does help support the channel, and I just couldn't ask for a better community. I really hope you guys feel the same about the message that you're getting on the Independent Investor channel, man. It's really good stuff. Let me kind of cruise up here and make sure that I'm getting some of these. So I've got Officer Towers in the group. I'll hit his question as I'm coming up here. So somebody said no to bonds unless you're close to retirement. It could be fine, and that's the allocation tool that I'm talking about for your portfolio. Really, the amount of bond exposure that you may seek out has everything to do with your risk tolerance. And if you're an aggressive investor, they don't recommend that you have any bond exposure. I'm an aggressive investor, but it just so happens to be that I've got 10% of my portfolio, and I find that to be a prudent move. You don't have to have bonds if you don't like. It's just I had a fat amount of cash sitting on the sideline that I wanted to put a little bit better use, and I couldn't justify putting it into more stock because I'm already very heavy stock in my portfolio. So that was my justification for it. I do agree with you. Thumbs down on the bonds and thumbs down on the gold. I'm not really sure I understand where that's coming from. I'm a collector's mindset. I would love to have the idea of having some gold, more so silver. I think silver is more of an attractive investment right now, but typically I refer to precious metals as not being an investment. It's more of a hedge against a downturn of chaos and in the world in case we ever do end up, entering into that. If you end up buying precious metals, typically you just want to buy it and hold it for the rest of your life. So, but interesting to see that. Wide moats, PB ratio actually makes money. PEG ratios, price to earnings to growth, well positioned. Main things I look for, and if that company is paying a great dividend on top of all that, looking good, it's a buy. That's awesome. That's a really good criteria to look at. I tell you what, I've never really regretted owning a dividend stock in my life. They typically always tend to pay off over time. I'm beaten up in a few of them right now. Kraft Heinz is just punishing me. Dow DuPont has just been terrible. Just horrible. And I'm continuing to hold the stock. Those are going to be a couple positions that I beef up on come the new year as well. So as I cruise up here, guys, I would take a drink of that wine, Andrew. I really would. I appreciate that, unless it's scotch or something. Appreciate you joining into the group here, man. I own some 500,000 worth of properties now, going through a refi on one to get cash back out to buy again in 2019, but I wanted more control over my investments. That's really killer, man. I think I remember when it started doing that. So I tip my hat to you, man. Very cool stuff. I got Andrew here. Petroleum stocks getting flogged, Ryan. Just when you think they are on the bottom, they keep going. And banks, yeah, as stocks, man, it's humbling. I don't get it. You'll buy a stock for all the right reasons, and it'll still continue to go down. Brent's throwing out CVS here in the group. I agree with that. CVS and Walgreens, no doubt. There's a lot of analysts that are up big on Dollar General. I own Dollar General when it was $50 a share. Should have just kept that, but I sold it when it hit 75. So unbelievable, man. Some of the things that happen in the stock market's amazing. I love jazz and I love wealth, but somehow they don't work together. Michael, I couldn't agree more with you. I typically want to throw my couch through the window when I watch that guy. So if it gives you any indication at all as to my feeling on his service to society and how much he's contributing to the betterment of people out there. So, and that's about all I'll say about that, man. Thank you for leaving that comment, though. Good stuff. I think we should all be aware of what critical service he's looking to provide. He's supposed to be managing people's money. I'm not really sure how he has so much time to come onto YouTube and pump a bunch of videos out there to advertise for his service. If he's that good, he probably doesn't need to advertise. He can probably just go through referral, in my opinion. Ryan, we are listening to you. Great information. Awesome. Thank you. Oh, that's when I said you weren't listening to me. No, I was just kidding, man. No worries. If you guys want to come on here and converse with these cats, man, I respect every one of them. They're awesome. I enjoy listening to them too, but I do have a live stream to run here. So I'm typically kind of using one eye to look at the conversation and one eye to pay attention to what I'm doing as well. So Ryan, always have been more interested in investors. I'm going to cruise down through here and try to find my place again. Ryan, I've noticed a lot of negativity around the traps with general market. Perhaps it's alluding to the dead cat bounce. I mean, that's really what they're talking about, to make sure that the uptrend in the stock market over the last couple of days is real. I'm of the opinion that I don't think that it is. I would prepare for at least sideways motion for a while. If this thing puts in a base, that'll be a good thing. Just the stock market can divvy out whatever it is it's going to divvy out. You got to be prepared for whatever. Just define your risk tolerance as it goes out, man. If you max the Roth, can you then contribute to a traditional? No, you can't. That's a good question. Thank you, Brad. I appreciate that. Gee, you got to have one or the other. Typically, if you're a higher income earner looking to reduce or get to another tax bracket, specifically one lower than the one that you are in, it can benefit you by contributing to the traditional because you can lower your taxable income by doing so. Typically, that's not really the majority of the folks that join the independent investor community. Folks that are, starting off, they've got jobs of, less than $100,000 or less than 80,000 or less than the median, which is 59,000. Most of those folks really need to contribute those dollars after they've been taxed, looking to grow those dollars into the future and have those tax exempt when they become eligible at 59.5. So, but great question. I appreciate you offering it to the group here. Traditional definitely has its benefits for a lot of people, but typically I find that the transferability, the elimination of the required minimum distribution at 70.5, the Roth doesn't have that. The Roth can be transferred to your dependents. If something happens to you, they can take an inheritance Roth. Just a cool thing, man. There's a lot of benefits to that. Not only that, but the uncertainty of where the tax brackets are going to be in the future. I'd rather just cap it at 0 and know that my money is tax protected, and whatever it makes into the future is going to be capped at 0. So a good question, though. Thank you for that. You can only, thank you, speculative, hit that up. I appreciate that answer, man. I just said the same. Brad Brown, no, a total of all contributions to all Roth IRAs is the annual max. That's correct. Thank you, Bill. Appreciate that. Ryan always has more investment. Don't worry about the trolls. It's a sign that the channel's growing. Rich Piano. Who's Rich Piano? Had plenty. Is Rich Piano somebody I should know about? I'm not really that plugged into the social pipeline, so you're hitting me up with somebody that I don't know. Thank you, Kev. Appreciate that for stumping me up. Remember, I'm 41 years old, so I defer to a lot of you guys that are a lot younger than me to keep me up to speed and keep me honest, you know. But I totally agree. I guess it's just one of those things to where if you think I'm wrong, you know, do it in a nice way. Don't be an asshole. I mean, Jesus, you know, would you say that to my face? I think not. So I don't know. I just think YouTube provides a conduit for people to be pussies. That's what I think. Just come on and just spread a bunch of venom, that of which they'd never do to somebody's face. You know, I mean, I do a live feed every Friday. Come on here and start throwing tomatoes. You'll see how far that gets you. You know, it's whatever. I just don't get it, man. But thank you for the vote of confidence. I appreciate it. I've got Poke's in here. I signed up at my job to get the Gap stocks at 15%. Awesome. My wife used to work there. It's a really good job, actually. And I don't think they do 15%. I think they do 50%, actually. What do you think about Gaps? They seem to pay a good dividend at 3.87. So the dividend is really, really good, man. But I got to tell you, retail is one of those that doesn't get me going, all right? Some of the best retailers out there, again, I've mentioned a couple. I wasn't kidding about Ulta Beauty, Estee Lauder, some of those retailers. You know, if you're going to go for best of breed, you know, Macy's has been quite good this year, but geez Louise, it's just not one of those things because, you know, Michael Kors can be super popular one year, and then it only takes a rogue of women to say, you know what, no thanks, I'm good, or some sort of protest as to what the hell they're doing overseas with their labor force, you know, and they turn on it, and then it's like, boom, you're left holding a stock like that. You know, I like L Brands, I really do. I like Columbia Sportswear, I like North Face. But I don't typically, I think the best retailer out there right now, if you wanted to buy a retailer and you wanted to make money, buy Lululemon, okay? They're the best. And I walked into a store just last weekend where they actually had a men's line, which was really quite nice. Now, I don't buy expensive clothes, okay? I've got this shirt on. I mean, I think I paid $20 for this, but I would never pay that kind of money unless I was going to some sort of special event. But Lululemon is appealing to a certain genre of health and fitness, and that I would gravitate to. The second on the list would probably be Nike. Okay, they just had a blow up quarter, very, very good, very, very strong. That can be a cornerstone in the portfolio, whereas Lululemon may be more of a growth name or a growth idea. As far as Gap goes for a stock, I like their clothes, I like their message. You remember what I said about being familiar with the product? It could be very, very good. I think they do a very, very good job, very clean stores, very well run, quality product. As far as a stock goes, it's not something that I would personally buy, because you just so happen to touch on kind of a sector in retail that I don't really like to invest in very much. But thank you very much for that question. I hope my opinion helped you. I really do. It's good stuff. Ryan is offering a great service, giving investors a place to go and hear a sound investor's point of view. Thanks, Ryan. So yeah, Billy, and I'm just one opinion. So I'm the most aware of the fact that I'm not going to have all the answers, and I don't. But I think what we can do with this YouTube project is spur a lot of interest or generate a lot of, which I do feel very passionate about. And if you didn't have somebody like me kind of explaining what it is that I do, and maybe even daring some of you guys to say, hey, this is something at least you can look at. You may look at it and it may not be for you. You may not want to invest on your own, or maybe you want to learn a lot more about the stock market before you do end up venturing out on your own. It at least helps to have somebody plant the seed for you, okay? Because just if you sit back for 2 seconds and think about the message that I'm putting across, where else are you going to hear this? This is something that doesn't benefit anybody other than the individuals taking on the program. You're not going to see commercials on TV. You're not going to see a commercial that says, come and plagiarize my platform and we're not going to charge you anything for it and you're going to keep all the benefits. That's how a commercial like that would run. The financial planners, they despise guys like me, but I think there's such a small ripple right now in the much larger lake with regard to this discussion. Now, one thing I did find really, really interesting is if you guys pay attention to the amount of outflows of mutual funds right now and the inflows of ETFs, there's a reason for that. And it's right along the lines of the niche of the independent investor channel, talking about, if you had reservation about becoming a self-directed investor, guys, there's products that you can buy to where you don't have to do anything for. You want to buy the entire market, buy the VOO, and you own it. That's it. If you want to add some small cap exposure to it, there you go. The S&P 500 is 81% of the U.S. stock market. The other 19% is taken up by VB. That's the small cap index, those stocks that are over $1 billion in market cap. If you want to own the entire U.S. stock market, buy the VOO and the VB, or buy the VTI, which encompasses all of the stocks of the U.S., right? It's just that simple. And the products are there to align somebody without a lot of experience in the stock market to gain very, very credible, diversified exposure to the stock market and get paid a little dividend to boot. I know in the Facebook group there was a discussion going on just this evening about talking about the difference of very high quality products in the VYM, the VIG, the VTI, the VOO, very good quality products, and there was some kick around whether or not which one preferred the latter. Some of the folks prefer the VIG or the VYM, which is the dividend ETF, because they want that little bit higher dividend exposure. A lot of folks like the more diversified product in the VTI, in that it's exposed across a lot of different stocks out there. But yeah, this is it's a big project, and I just want to make sure that we're growing the channel correctly. I'm going to be the same Ryan, whether or not we grow to 50,000 subscribers or 250,000 subscribers, or we go back to 5,000 subscribers. I don't really care. I'm going to be the same person. I'm not going to get on and make a funny face with my thumbnails just to provide clickbait to people. Now, I do kind of use a little bit of imagination with my thumbnails. I have a little bit of fun with it. But honestly, that's really to drive as much traffic as I can to the channel without sacrificing the integrity of who I am. All right. But those types of comments, man, I really appreciate, and I really do take those to heart, man. I really do, because you guys have to understand. While I'm sitting here delivering I've got about 1,000 views every time I throw these online. There's people who review the content that can't tune in on Friday evening to the live stream. They catch it after the fact. So there's a lot of people, man, that are tuning in and are really pulsing in with what I'm putting down. And what I do. So I think it's resonating. I think it's appreciated, and I think it's well received by a lot of people. So I'm not too concerned with the few idiots that come on and want to spread venom. So I'm not too concerned about it. Hector Mendoza, Robinhood, and Acorns are my two vehicles I use for my long term. Wow, that's an interesting. I'd like to know a little bit more. If you don't have a retirement account, which neither one of those offer, I'd highly encourage you to keep those two. It's not hurting anything, but look at the prospects of starting a self-directed Roth IRA account. And if you're married, then you could start two, and that's a big deal. And that's where that 12,000 comes from for me and the spouse. So the stock market will always humble you to your knees, Ryan, aka the grinder. Yeah, I've mentioned that a few times, man. Mac, I'll get to that request to pop in the Facebook group, man. I'll get you. Ernest is probably already. The few administrators, they'll go in there and they'll authorize that request for the Facebook group, man. So we'll get you hooked up. Welcome. That's another killer option, and that's another thing. Back to Billy's point, is this stuff's all free of charge to you guys. And in today's society, where you've got everybody under the sun trying to charge you for freaking everything, the air you breathe. I mean, it's amazing how much people want to just charge you a bunch of crap for. That's one of the cool, unique benefits in the independent investor channel is all the services are free of charge. I mean, you might have to fight through a couple commercials because I do monetize the videos, but I'm pretty open and upfront with that. And I've always done that from day one, ever since I've been able to monetize the account. Certainly some compensation for my time. I think most reasonable people understand that that's a reasonable ask, because again, I have put, you know, thousands of dollars into this channel with the equipment and things. It's not easy. It's a stand up. It's an initial cost to get it going. So I've said that for many. It's figuratively speaking. When I say humble you, you know, I don't want people to be scared of the stock market, but I want people to understand, man, that there's two sides to the stock market. And I think I'm doing a big disservice if I don't provide you that transparency, that of which I don't think was being provided through YouTube. When I first started making videos, I think a lot of people were coming on and they were being like, this is the greatest thing ever, man. I just throw money at these stocks and they just go up every day. This is awesome. I just start a brokerage account and I just start the account and it makes money. This is awesome. And how could you know any different? Because that's what the stock market was delivering there for a while. So yeah, so I just beg to differ. Seriously. Future's hot, summer's day, but more downturn to come. Perhaps we'll see. I think it's a little too soon to say if we're not gonna maybe enjoy a little bit of a correction period, but I don't see a recession coming. But we will see. I'm going to be looking to safeguard some cash here when I get some upswing in some of these positions, and if I don't, I'll continue to hold them long. I'm totally fine with that. So will Roth max be increasing every year because of inflation? Do they have a date they announced if the max? That's a good question. This is the first year I've seen it change for the last 6 or 7 anyway. That's a good question. I think if Ernest is still on the live stream, he likes to take these projects and get the actual right answer. He may take that and look at historically how they've increased those contributions. And I would say that that's probably reasonable to think that it's attached to the adjustment for inflation over time. So heck of a question. I don't really have an answer. I'm good. I'll take the 6,000, man. I mean, they could up it to 10,000 for all I care. I'd take it, man. 20 grand to the Roth, that'd be awesome. So it's a good benefit, man. Every year that goes by that you're not max contributing, you're kind of losing out of your provided benefits. So one way of kind of thinking about it. Can you do a dividend reinvestment drip on first trade? Yeah, man. So Greenhorn Grill and Smoker, man, my restaurant owner in the community here just asked about dividend reinvestment in first trade. So for you guys that have a first trade account, I was just walking a colleague of mine through the platform. It's actually very, very simple to set up. It's actually in the main screen. And I can do a video on it, but I just will tell you that it does exist. I had Officer Towers as well hit me up with that. I didn't need to call him and ask him, but they do have a dividend reinvestment program. It's very simple to set up. It's worked through your main page, and you'll find there that if you click on the More button, it's going to show Set Up Dividend Reinvestment Program. You're going to want to click on all holdings in the account and hit submit, and that's all you have to do. It's very, very simple, free of charge. Of course, it's a self-directed account, but I'm happy to tell you guys that I just set that up on my account 2 days ago. So thank you for that. I really appreciate it. I will do a video and walk through it. That's fine. I don't have a whole lot. I just have the VB right now in the first trade account. I'm actually kind of formulating how I want to utilize that account and not get too spread out. I will probably be buying some dividend paying stocks in that portfolio. Some beaten up dividend payers in that is probably how I'm going to be utilizing that. But right now I just own the VB, the small cap index in there, or the small cap ETF. So, but great question. Thank you. If you can't figure it out on your own, man, just shoot me up with a DM. Or a direct line. I did a couple direct helps this morning. I was glad to do it. It's fun to do for me. For some of the community members, I'm pretty accessible, about as accessible as you can possibly be, as long as I can find the time, because I am very busy. I'm busy all the time. So do you use any portfolio strategies for gold and silver? I wish I did, and I want to. and it's probably top on my list to start accumulating some gold and silver, more so silver at this point. I'm really interested in it. Provident Metals is my vendor that I already have identified as the place that I'm going to use. So if you're interested in it, and I don't know if you have a vendor, or if you've got a lot of wherewithal on the topic, because I don't. I've just been referred to Provident. They're very good from what I can tell. And I'm going to be getting ready here. I'm just letting my portfolio churn a little bit, and not trying to just jump on everything that comes my way. I'm really I kind of go into my shell a little bit when stuff starts to get kind of crazy like this, and I just kind of disconnect from it and watch my plan and watch my portfolio, how it reacts, how certain stocks react, who does what in the portfolio. My most recent additions to the portfolio have been Baidu, Alibaba. Those have been my two additions. So I've got a pretty good Chinese stock allocation right now. I think that's another area of opportunity in 2019. Baidu, Alibaba, JD.com, China Mobile, and there's a couple other I'm actually looking at, but that's going to be it for my Chinese exposure. I own all four, but that's another area of opportunity. But the answer to your question is no right now. The strategy that I would deploy is no more than 5%. That's just me. Now, I'm not a hard and fast rule type of guy. If I wanted to stretch it a little bit, I could. But I'm very intrigued at owning some gold and silver, but I have to take into consideration a couple things. Number one is I move a lot, so it's very, very difficult. You guys think that it's easy to just go out and buy, so much weight of gold and silver. It's kind of a logistics nightmare for me because I move a lot, and I have to think about not only safeguarding it in my home, but I also have to think about transporting it as well. So just things to consider, but even with all those logistics hang-ups, I'm very intrigued in the topic, and I will be accumulating that as I get older in life, just because I'm a collector, I'm a builder. That's just the way I think. I think about building my portfolio the same way that I would think about building up a gold and silver and precious metals portfolio. But that's a great question. Thank you for that. Good stuff. You look it up at Google. Yeah, I don't know what you're talking about there, Hector. I think you're talking about probably gold and silver or something, or the dip. I'm not sure. Doug, right below you there. Don't worry. Don't worry. A lot more red days going to come. Perhaps I'm getting a lot of that through the channel, and I really don't. I'm not really sure what crystal ball you guys are using to understand that. I mean, I could look at the charts and justify that position, but if it's outside the charts, I'm not really sure if it's just a feeling or an intuition that you guys have. Doug, you're pulsed into the stock market. I got all the respect in the world for your opinion on this stuff, and I listen, no doubt about it. You could be right. You could also be wrong. So I don't mean that to be rude, maybe, but it's just something else. Who's to say? Who's to say right now? It's been crazy. It's been real crazy. It's been kind of fun to watch because this is an unprecedented roll of volatility here. I mean, the worst December since the Great Depression. That's amazing, really amazing. What the stock market is able of doling out when it ran up that fast, and I think it's basically just a quick unwinding of that quick uptick, the tightening of federal policy, right, monetary policy, and now here we are unwinding, and it doesn't really know where to stop. I think that's a lot of what you're alluding to. You could be right on the money. I hope you're not, honestly, because I'm good with how far it's went down already. I'd like to see it go up 4,000 points from here. But that's just me. So how's Trump's wall going? It's all gone quiet on the news in Australia. That's funny. That's funny because when I go to Europe, the news is so much different on American news. It's so much different than it is here. It's pretty wild, man. First Trade has that feature. Thank you, Lydia. That's true. I just worked through that this just a couple days ago for a colleague of mine I was helping. Roth has not increased for a few years, Kanon, so it definitely doesn't go up yearly. Yeah, that's true. It doesn't go up yearly. I know it had been about 7 or 8 years. There I get David Mathis responding there to K9. So hour and a half. I'm going to try to wrap it up here and kind of get to the end of the questions. If I've missed something legitimate here in the group, not to say that every one of your guys' comments aren't taken legitimately, but I try to pick and choose here what the investment related stuff is and try to decipher what it is you guys are talking amongst yourself, which I love that, man. I think it's great, man. I really do. When would you have an opportunity to converse with so many people? I've got Australia, Los Angeles in the group here. I've got probably Hawaii in the group because I'm seeing aloha all over the place. And it's just representatives from really all over. I've got the West Coast in the group here, the East Coast, me, this is not my home, but I'm representing currently. So Jazz wealth is a wolf in sheep's clothing. Well, he's not the only one. This is an industry that's riddled with socially acceptable criminals. Seriously. Again, I'm going to be doing the video, and the broker that's going to be that really the center of my my focus is Ken Fisher Investments, which I feel like is absolutely one of the most expensive out there. And I was actually online today reviewing some of the negative commentary that comes through. If you guys think that the independent investor channel or self-directed investing is something that you just can't wrap your mind around, go on there and read some of those comments, and then you'll come back to me, man. Really. I mean, they're putting him into the same category as Bernie Madoff, honestly. And I have no doubt that he does everything legitimately. My question is, what is the bottom line? What does it mean for an individual investor who has over $500,000 who is willing to pay 1.5 per year, to where if the stock market goes down huge, they still get paid their 1.5? If the stock market goes up huge, you're going to still pay that 1.5 of management fees. What other fees are existent in that? Because there was a lot of people that were talking about when they actually got their statements back, it was amazing how little, or if any, they actually made. So it's all just a big smoke and mirrors. And are they any worse? They put a lot of commercials on TV, and he wears a suit and tie, and he looks like a reputable dude. But I don't bestow that upon anybody. I think some of the most legitimate people that I work with on a day-to-day basis are the people that make this country go, honestly, in a lot of different services. And your honesty has a lot to do with me with regard to what you contribute. And I'm not really sure. I mean, this guy's a billionaire, so be accountable for what it is you're providing as a service, and what does it actually mean? Can somebody be involved with your product, and the majority become successful at? I would go out on a limb and say that what we're representing on the independent investor channel probably provides way more value to way more people. Because how many people, honestly, how would you feel if I got on here and said, I only want to deal with people with over $500,000 to deal with? That's like, really? Jesus. And he outright says that, man. It's amazing. So pretty crazy stuff, man. But yeah, a wolf in sheep's clothing. I couldn't agree. I love Jazz Wealth and I love wealth, but somehow they don't go together. Exactly. Comcast has its own business plan going on in the background. I work in the communications industry, and they have their hands in everything. That's why it's such a good stock. It's a real good buy here at $35 a share. Valuations just come down way, way too heavy. I've made money on Comcast in the 40s, and I think at $35, Comcast is a buy. No doubt, Bill. Thank you for that little tad of insight. I didn't know that, but that's good to know. A little bit more validation as well as having a pretty cool theme park down in Florida as well. So pretty cool stuff, man. Jazzwell channel does not provide some good information, but will not invest with them. Their fees are very high. Yeah, that's awesome. Yeah, that's a great business model, man. Rip a bunch of people off so they can make themselves wealthy. That's awesome. That's great. I'm so happy for them. I'm so happy that people will actually be so naive to go on and support that type of garbage. Honestly, man, there needs to be more people like me that just come on and do what I do, man. I'm receiving a little bit of compensation on YouTube, but I'm a good guy, and you guys don't suffer between coming on and conversing with me. I'm not reaching around grabbing money out of your pocket. My intention is legit. If I'm going to make money, I'm going to do it the right way. I'm not going to do it at the expense of people. And there's a lot of people that disagree with me on that. A lot of people will say, you need to offer service to people. You need to offer a product to people. You need to offer this, offer that, offer blah, blah, blah. And it's all a bunch of crap, honestly. So I funded my RE business. That's awesome. Hey, Ryan, I hear you talk about ETFs a lot. Do you own any mutual funds? I did own mutual funds. A funny story about mutual funds is when I owned mutual funds for quite a few years, actually, with the brokers, with the financial planners that I went with at the time, it was Citigroup Smith Barney. And before that, it was Thrivent Financial. After that, it was Edward Jones. Come to find out, those products were sold to me. The financial planner made a hell of a kickback on selling those products to me. I had no idea. The expense ratio on those mutual funds are actually quite high. If you look, most of them are at about a point or a point and a quarter of expense ratio. You'll lose that right off the top. So it doesn't matter what it is you get for a year-over-year return, and don't be fooled. Okay, Ramsey talks about having this secret mutual fund that he offers and recommends to people. That's a whole full circle. You want to talk about wolf in sheep's clothing? He's wrong on that too, because he's providing those mutual funds to people, and the folks that he's in bed with get a kickback on those mutual funds that he recommends. So it should be criminal. Like I said, I'm amazed at how infrequently these folks get looked at by anybody as doing this dishonest recommendation of products, even if it doesn't have the client's best interest in mind. They're not fiduciaries, so they can sell you anything that you want to buy. So with that said, I'm not a big fan of mutual funds because I think you can get such comparable product through an ETF, paying 0.04 or 0.08 of expense as opposed to, paying, 50 times that amount in a mutual fund. Why pay that extra overage that's going to cost you potentially hundreds of thousands of dollars over the long term? If you stretch it out over a 40 or a 50-year investment time horizon, go on to the Trading Academy and look at their compounding calculator that takes into account expense ratio and run the figures for yourself. Run it at 0.08 on the first example. Keep everything else consistent, but change the expense to 1. Change it to quarter, and then forecast it out 40 years. You're going to be amazed at what you see and understand mathematically why I don't recommend mutual funds. I honestly think they're a thing of the past, and I think they're subpar to what you can get passively through an index fund, which is more like a mutual fund, just with a lower expense, or ETFs that give you the same really level of exposure as the index, but trade like a stock during the regular trading day. So hopefully that helps you on answering your question there. Very good stuff. I believe oil will still continue to drop. Man alive, I don't know where you get this from, Doug, but you could be right. I don't know what's going on. I mean, we're at an oversupply. So if we're at an oversupply, the price is going to drop. I don't get how we get into this situation. It's pretty amazing. I mean, we're 20 bucks away from the all-time low. I remember when it was 25 and there were folks going out of business, man, claiming bankruptcy, all that. It's pretty wild to watch the ride. So I'm going to continue to hold on all my major oil holdings, but something to at least observe going forward. Petroleum stocks getting flogged, Ryan, just when you think they are on the bottom, they keep going. Yeah, I've already hit that question. Guys, with that, I think I'm kind of all the way through the group here. I'm just going to scan through and make sure. Really appreciate your time and engagement tonight. An hour and 45 minutes, that's a pretty good clip for me, kind of on an average of an hour and 45 minutes, man. So I will kind of wrap it up from there. Again, if you're coming in and you help support the message, hit the thumbs up for me, man. I guess it helps the channel, and maybe we'll pick up on an algorithm from YouTube. Maybe they'll build a Google algorithm that'll actually pick up the independent investor channel and maybe promote us a little bit. That'd be kind of cool. We'll see. Thank you for that. I appreciate that. With that, guys, I just want to say in closing, happy holidays to you guys. Happy New Year to everybody. Be safe. Don't be stupid. All right. You're not going to be able to invest next year if you end up doing stupid and going and drinking and, doing your thing. Do drink, but be smart about it. All right. And that's all I'll say about that. Keep your eye open tomorrow for the release of the growth and the value videos that I will be releasing both tomorrow and Sunday. And then, of course, we will be returning. We're going to be continuing strong on my upload schedule. Looking to take a little bit of leave from the channel, probably early next spring, where I've got some work obligations. So I will be putting as much content as I can out there and then taking my leave from the channel. So just kind of forecast that for you guys in the group. But with that said, I will sign off this evening. Guys, have a great one. Happy New Year to everybody. Happy holidays. And we'll see you again next Friday. Thank you. Thank you to everybody.